Well, welcome back to not Krown's Crypto Cave, Eric Krown Crypto. Yes, the good old cave is always here. It's always with us. It always lives on within our hearts. But more importantly, we have some very important price action to discuss today. Going to do a little bit of long-term and higher term time frame analysis as well. And of course, we'll follow up on the short-term time frames, of which we spoke about on yesterday's shorts video. Anyways, with that said, my eye's feeling better, so thank you for all the well wishes. It's actually been really kind and nice. And I think without further ado, let's get into the Krown Chain application over here, which we found at app.krownchain.net. Oh, and yes, my computer, got it all fixed up and ready to roll once again. Knock on wood, though. I don't want to see it break again because that was actually rather concerning. Anyways, what do we see on the top end dashboard? Bitcoin dominance taking a big leg down right there, about 0.5% from 43 to 42.5. I do want to check in on the Bitcoin dominant chart either today or tomorrow when we do have time. And then we do see that the fear and greed index actually took about a couple points on a downturn as well to a 71. Still within the greedy zone, but overall, again, I still have the same thing to say about this as I have for like the past couple, or like 2-3 weeks now, actually, in the sense that Bitcoin's pretty much at all-time highs right now. It's above $60,000 comfortably, I suppose you could say. Many daily closures above there, and the market isn't getting super irrationally greedy. And what do I mean by that? I mean like reads above an 85 to a 90, of which those are typically met with some concerning areas, we'll say. Anyways, as far as top 10 best coins, we see Cadena, that damn KDA thing, keep on keeping on, if you will, up 50%. It looks like Avalanche, Helium, OKB, Loopring, and Nexo, Chili's, Engine Coin, all with some pretty damn good gainers right there. Into the market data tab we go, and again, when I look at the underlying market dynamics right here, we have a very obvious setup, right? Volatility is obviously crunched. We see that the leverage ratio is the highest it's ever been ever. And we also see that the open interest is also the highest that it's been ever as well, or pretty much around there. We are on the precipice of a major move. I'll say what probably everyone else already fucking knows, right? The real question is, where's the direction, right? Where's the direction? And we're going to go over that soon enough with price action. But basically, to boil it down into one sentence, if you just want to kind of sign off after this, then it goes something like this. Above $64,000, good. Below 58.5, bad. We're talking about big moves from those major pivots. Anything between there is just range and short-term. Well, short-term just rangy, I suppose. Anyways, other than that, I don't have anything new to make out of these over here, except for the global funding rate, of which we've actually seen it kind of downtrend over the past like couple weeks now, since Bitcoin pretty much hit its all-time high at $7,000. So technically speaking, that would be a little more on the bullish side. It's not till this is about 10x its current number, where I do look at it as rather concerning, but it's more or less a non-event right now. And I think that people overanalyze and something like that are just going to go into overanalysis hell. So let's get into the short-term timeframes first here, as I do want to follow up on the last couple days of analysis, of which on Friday, I believe it was, we said, hey, if we take out the prior day's low, looking at targets, very likely somewhere down around $60,000 with a bounce implied. That's what we got right here, actually right after my Friday stream. It looks like, we actually came, just about down to $6,000 even. Not bad. Every once in a while, that TA bullshit works. And yesterday on the shorts video, I said, hey, look, this doesn't look too great, of course, but it is a weekend and we are at a major area. And I'm very likely looking at a bounce at the very minimum to about 61,500. And then depending upon where things close, could extend that as well. And that's kind of where we're at today. So far, so good. And on the lower term timeframes right here, and I'm talking about actually more or less like a 4 hour and under, we do have, I imagine, probably some hidden bearish divergence being built right now, and I probably am looking at a bit of a pullback here. Yeah, we do have some hidden bearish divergence. By the way, caretakers are the new version of its RSI, version 6. If you already had it, it's already updated. You just have to take your indicator off and then add it back on into TradingView. And then I've also uploaded a video into the materials on the Krown Chain app that explains the new settings and everything. Anyways, it is going to be confirmed with any sort of a closure here or lower in the next 3 hours and 19 minutes. Obviously, a lot can happen between now and then, but basically any sort of a closure below about 61,700, and that will confirm. And at that point, I would be looking for a rundown somewhere around $61,000 low. Keep in mind that is where CME did close on Friday, right here. About $61,000, and there's about a $300 or so premium on CME over spot price action. So perhaps that puts Bitcoin a little bit lower than there. So did we come down and test that region around, around CME open a little bit later today? Perhaps yes, but that would be, I think, a little bit more relatable and actionable as a, as an actual trade, not this financial advisor, and I'm certainly not a financial advisor as well. If Bitcoin does confirm hidden bearish divergence right here on the 4 hour. So if that does happen, then looking somewhere actually just below $61,000 again. Do we bounce off, the same levels from the past couple days here? Probably yes. I don't really, or at least I hold off on getting too damn bearish, especially as long as Bitcoin's above 58,500 on a daily specifically. Below there, and we'll get into this in a little more detail, that's going to be very problematic. Until that happens, I mean, I generally look at Bitcoin above 60,000 bucks as more good than bad, obviously. And on the 12-hour right here, we actually did just confirm, or sorry, no, we have not confirmed, but we are building and will potentially confirm hidden bullish divergence here with any sort of a closure here or higher in actually the next time frame as well, or sorry, the next 4-hour close as well. So this next 4-hour close pretty fucking critical here, as you know, if we do negate the hidden bearish divergence and then confirm the hidden bullish divergence, that would help with a obvious bias on the medium term time frames. Very likely be getting another move back up to the top side of our range. Technically not 64,000, although you know, it's right around there. I'd say it's 63.7 on a 12-hour and 63.8 on a 4-hour. And if you're on an hourly, I think it's maybe like 64 even. Let's actually double check. Actually 64.1 in this case, but whatever, same thing. Anyways, let's go back on over here. And I do want to talk about a few more things on these timeframes before we move on to the fun stuff. But 12-hour BBWP is on the floor. Pretty much every timeframe's BBWP is on the floor. 4 hours on the floor as well. Hourly is probably flip-flopping around, but that's not going to relate towards the, you know, towards the resolution of this range. And then of course, daily has been contracting into oblivion here as well. So again, you know, can this stay down here for longer? Yeah, absolutely. I mean, we've certainly seen that in the past, but once the BBWP starts to get above the moving average on this, that's when I start to look at this as, okay, we are probably seeing the move like within the next 48 hours. I was thinking that this was going to happen on about Wednesday of this past week. We did not get that, even with all the economic data coming out and all the Fed, you know, notes and whatnot, FOMC, all that good stuff. So, you know, at the end of the day, I suppose everyone's just waiting yet again. But for what it's worth right now, while the very short-term timeframes do not necessarily have an obvious trend going on, and if anything, it's a little bit short-term down, the medium and higher-term timeframe is still very much to the upside. And what does the 12-hour do as of the last 24 hours? Well, it looks like we put another higher low right here. And if it can confirm that hidden bullish divergence, that would look really, 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 really good, this chart specifically, for, well, at the very least, testing the top side of the prior range highs again about, let's just call it mid 63s. And then if Bitcoin starts to close back above there, well, what do we have? Well, as of right now, Bitcoin seems to be painting some sort of a reaccumulation formation. You might even call it an ascending triangle. This one's actually pretty fucking textbook right there. And that's a good sign. You know, your formations, or if you are going to be pattern traded, they should be obvious as fuck is the technical term for that. And in this case, this one will be obvious as fuck. But of course, what negates it? Coming back down below essentially yesterday's low at $6,000 territory. So that would be a big red flag, meaning that at minimum, I'd be looking for a move down to about 58 to 58.5. But I'd still probably hold off on calling like a major meltdown from there, to be fair. And of course, because this is an ascending triangle, there is a higher probability that it does break out to the upside, and we do have a technical target on that. I'm sure it's probably around like 69,000 bucks or 68.4. And that probably leads on towards more prolonged and long-term continuation, of which I'm sure that matches up with, oh, what do you fucking know? The 1.618 right there. Lovely. And realistically, while it would be looking for a pullback from that region, maybe like, you know, plays from 68 down to 66 or even 65 and a half, probably looking for the continuation into the mid 70s actually after that. You have to keep in mind that, of course, on our secondary charts over here, the bi-monthly is trending above the topside trend band. And on the bi-monthly, I mean, we just have continuation of trend here to begin with. So, you know, I always want to address this because I actually have a very strong appreciation of price action trading. And to be fair, you know, if you are interpreting this chart from a price action trading standpoint on the monthly, kind of not the most bullish close, actually, funnily enough, even though it was on new highs, this kind of would be, I suppose, forming a bit of a bearish order block. I think it still has a little bit more work to do in order to actually fully confirm that. I'm not like a price action trading authority, by the way, but I think I understand enough to at least give it that look. What I like about the bi-monthly over here, though, is that it's very, very clear and clean. And in the sense, we do have a new higher low right here, and we already closed on new highs, so it must be continuation of trend first and foremost. So I do favor that over the prior notion. I just want to put it out there because, like I said, I do respect that style, and it is relevant because when we talk about the downside targets, you're going to see that they can get pretty fucking nasty if we do turn down from here, again, with everything built up. But on the bi-monthly, you know, anytime that we're trending above the top side trend band, I'm basically looking for continuation of trend on the macro scale. And we're talking about, you know, big moves. I mean, the last one that we started trending above was way back on over here for a 350% gainer. from closure above to next major high. Over here, about 1,300, or almost 1,400 actually. And then of course the one before that going back on over here for another about 425% gainer. And if we were to just kind of, even take on the lower end right there, I think it was like 350%, be something like this, where we take the low of that one and then add on, well, 350% puts Bitcoin at about 220,000. So fair enough, we get into those crazy numbers essentially. Okay, cool. All right. So again, I suppose I am biased towards the upside resolution, especially as long as Bitcoin's about $6,000 territory. And looking at this from a triangular fashion, we're probably looking at resolution. Let's see. Usually happens when you're about 70 to 75% full, and that'll be right around here. So that's going to be anywhere between about the 11th and 14th of this coming week, which is when? That would be Thursday to actually Sunday of next week. So fair enough. We probably resolve this range, I'd expect, before the next weekly closure. So we can actually spend a little more time in here, just for what it's worth. I don't think there's a huge, there's actually a major rush right now. Anyways. Okay, cool. So we got all of that. We are 10 minutes into this video. Okay, so that's all the fun stuff right there. Let's talk about major downside targets on a break specifically of 58.5. Again, realizing that is not actionable until Bitcoin, obviously breaks 60,000 bucks right there, but that would be the first major warning signal, to be fair. I would be looking for a healthy move all the way down to about 55 to 56,000 bucks. Should be a nice bounce somewhere around there, as Bitcoin did put in a bit of a sideways consolidation, not a super not a super long period, obviously, but good enough at least for probably a tradable bounce in my opinion. However, I would not be looking for the low to be put in there actually if Bitcoin were to break down, to be honest with you. I do think that Bitcoin would very likely come down somewhere around the 200 simple, which where is it? Uh-oh, where is it gone? Is it gone? Wait a second. I think, yeah, here we go. 200 simples. Okay, that's all the way down at 45,000. I don't know about that. Maybe more like 48 to 49,000 bucks. Now, again, I'm certainly biased towards an upside resolution here, but Bitcoin does go to the downside. It's going to be bounced along the wave, extremely likely, but I don't think that we're going to bottom out in the mid 50s. I would obviously be open to it. If Bitcoin were to bounce back up and reclaim, let's say like 61 or 62, that would probably look good. Of course, though, if we do, I'm generally looking down around here, and that's where I'd probably be looking for the next like major low in this case. I wonder if the weekly has anything coming in around there. Yeah, the weekly has the 21 exponential kind of around that region as well. So yes, this is kind of a major. I mean, personally speaking, I think this next week is going to be pretty fucking gnarly, to be honest with you. Also, before we get into the other fun stuff, I do want to look at this as well. Go over to our momentum oscillators over here, and let's see what the daily Stokes are doing. Going to be pointed up and northwards as long as we're above 61,000. This is spot price action. CME, a little bit different right here. And of course, I always favor CME over spot price action, but any sort of a closure below 64,000 bucks today, essentially. And, well, continues heading down, so fair enough. What about the 5-day? We closed that one last night on spot, and we are actually crossing down right there. So that would be a little more on the concerning side as well, I suppose. Although I don't really see, I don't get too concerned until we actually lose the bullish control zone for what it's worth. And then the weekly is going to be closing later today as well, and will only turn down below 59,500. Now, here's the other thing. Again, helping out with the very high term time frame bias, the monthly Stokes cross the upside within the bullish control zone, by the way. Healthily. So I'm obviously going to like that. And I think the bi-weekly is closing today as well. Yeah, it's probably fine. I mean, 49,000 bucks. So knock on wood. But overall, that does help out with my bias, as anytime that we have seen it cross within the bullish control zone, all these vertical lines right here, which is going to look a lot more impressive when I put it on a log scale. See these moves like 11,000%. More recently over here at 3,700%, and then more recently over here at like a paltry 600% almost. So fair enough. Anyways, that is why I'm favoring the upside resolution as well. And also it's just always secondary to general trend here. Okay, 14 minutes into this video. I think we finished off all of that. Should we talk about fun stuff today? Yeah, fuck it. Why not? All right, let's get on over here. And what do we have? We do have a lot of things going on in this chart. So first and foremost, I want to talk about the PMARP over here. This is just a weekly look on this one. And what am I running? I'm running a 35 VWMA. Sorry, I'm actually just using the PMAR in this case. And I just wanted to, show something very simple here. The weekly regained the moving average on this, actually just recently, on a weekly, of course, which was like early October, it looks like. And basically any time that we see this indicator above the moving average on it, generally good. Like I'll mark off these points right here. Boom. Oh, I guess you already have them marked off. No, these would not be it. But, you can see just by eyeballing it, like this is where that first one started over here. Boom, humongous move. Same thing over here, regains it, humongous move. It loses it over here, highs in, regains it over here, big move. Regains it on the lows over here, grinds its way up. Nice, loses it on 2017, December, and down we go. Regains it in January 2019, massive move to the upside. Same thing over here, down, and then 2020 all the way up, and we just regained it right on over here, and it's still within a not so concerning region. I mean, you can see that this can get up way fucking higher than what we're currently at right now. So just looking at that, I again, I am long-term biased towards the upside resolution of this. And of course, when we are talking about the log curve zones, we've never seen Bitcoin not put in a macro cycle high that didn't at the minimum get to the red zone here, of which we have 1, 2, 3 iterations. And now I want to talk about, I suppose we will talk about it. I don't want this video to be like super fucking long, but yeah, fuck it, we'll do it right now. Okay, cool. So I'm going to we can leave that on. How do I want to do this? What's going to be the best way? Okay, I got it. All right, so I'm going to put it on a line chart. Actually, no, it's not going to be good. It's still going to make better sense with the candles. All right, beautiful. Okay, so what I'm going to do now is I'm going to go over all of these cycles, and we're going to address the whole lengthening cycles hypothesis and all that good stuff. So basically the hypothesis is that as time moves onwards and forwards, and as this market matures, we can expect that the cycles, these boom and bust cycles essentially, get longer in terms of time, and then the returns on them are actually theoretically diminishing. Now I have a couple things to say about that second part because, well, we're going to see it soon enough. But first and foremost, the initial assumption does make sense. I mean, in my experience, assets as they're maturing as an asset class, like there's going to be more people joining in, and more people joining in theoretically means that there's more people, putting their orders within the order book, and more orders within the order book creates, more congestion, and that theoretically means that it would take more, more equity to move price action. So theoretically, cycles should move slower. And I think that that's also proven, which we're going to do right now. So we're going to define a cycle in 2 ways. The first way is the most important way, going to be the weekly trend. Anytime we see a reversal, it's over. And the second way is that the highs must be put in at the red zone here. So again, this one in 2013, this was not a full cycle right here. Also, there wasn't even a weekly reversal there to begin with. So I think that kind of instantly negates it. But just as an aside. Anyways, let's just measure it out. So I'm going to measure from the lowest closing price. The lowest, that's where we're going to start, the lowest closing price, and we're going to end at the spike into the red zone essentially. And let's just see. So this first one right here, that's going to be the cycle is going to be 322 days long. Let's see if I can bring this up as well. Man. Okay, we'll do 22%. I'm ridiculous. So we'll just throw it. Okay. Let me just double check that was actually correct. Okay, so it's 322. Yeah, we got that part, and then it was actually more like, wow, the actual fuck. We go to the wick high, it's going to be like 64,000. If we go to the closure, it's going to be about 37,750. I'm going to go to the closure for the percentage gains, and I'm going to, yeah, that's how we're going to do it. Okay, 37,750. Okay, beautiful. All right, so let me just adjust this right here. 37, that is still ridiculous. Something like that. It doesn't need to be exact. We just want to generally know. Okay, then comes all the way back down. Where's our lowest closing price in this next cycle? Right here. So we're going to start right here. And where's the high of our next cycle? We don't get into the red zone over here. So over here, where is the actual official highest? Right here, actually. That is going to be about 742 days and just under 46,000%. So 742.46. Okay. Let's do days. Was it close, but why we love this, I guess. All right, let me just double check that I actually got that one right. Okay, a little bit more, but whatever. It's at those numbers, like any slight move makes such a humongous difference in the percentage that it's not super interesting. Okay, cool. Then we move on into 20, the next cycle, which we see the low put in, the lowest closing price is put in where? Okay, let's see. Where actually is it? It's certainly right here. Okay, so it's in August of 2015. Okay, let's start right there. Okay, let me actually zero down in on it. Okay, and for the next cycle high, that is about, let's say 8,600% and 800 and, hold on, is this right? This is the lowest closing price. 228.53, 211.03. Okay, sorry, I stand corrected. Okay, here we go. All right, 9,000%, 1064 days. Okay, 9,000, 1064, easy to remember. 9,000, 1064, let's write that out over here. Days. 1,000 right there. Okay, cool. And then that leads us into our next one, obviously, which we see the lowest closing price right here, right? That's going to be in December 2018. And going to our current cycle high on even a wick basis is about, well, let's actually use a closing base just because that is what the prior ones were, like about 1,900%. By the way, we're at the exact amount of time as well, 1064 days. Very interesting right there. Very fucking interesting. So if you do believe in lengthening cycles, which the prior cycles have been, probably actually do a statistical interpretation of that soon, then you would say you'd conclude that well, 1064 is probably not proper, and 1,900% is an outlier on the other side as well. So let's do days. Cent. Okay, very interesting. All right, so let's actually get rid of all the other ISOs on this. Sorry, apologize, I'm not preparing for that part, but I'll actually go back to that soon because there are a lot of interesting things to say. Anyways, I'm still recording, the microphone's working, so that's good. Anyways, okay, so let's kind of compare this for a second. All right, 322 days versus 742 days versus 1064 days. These are completed cycles thus far. The returns on them are, in my opinion, well, they're not diminishing. I mean, at least I wouldn't draw that relationship from them. The first two, technically speaking, it increased on the second one, but I would just say at that level, it's like they're just so fucking high, it doesn't matter. And then the most recent one, yeah, definitely diminished in the cycle. It did lengthen as well, but I don't think that diminishing return, technically speaking, diminishing returns is not proven. I do think it's probably going to be proven over time, though, but technically speaking, it's not proven actually. And then the day's getting longer. So how much longer is 322 versus 742? So let me bring out my little calculator over here, so we can how much longer they actually are. Calculator right here. How are we going to think in terms of math right now, which is difficult for me to do in the early morning hours. Okay, boom, boom. How much longer is it? About 43%, let's say. So this one, then the prior. Okay. All right. Let's actually adjust this. It's there. Okay. How about this guy right here? Actually, I'll move it down maybe a little bit, make it easier to see. Okay. So 742. Let's see how much this one's gonna be like 20%. I can already do this one. Double check just in case, but I'm pretty sure it's gonna be like around 20% or so longer. What the fuck? Sorry, I am thinking completely wrong right now. Try 69%. Okay, wow, I'm glad I did that. Jeez. Oops. 9. Okay, I should have known that. Jesus Christ, man. It's 742 versus 1064. Yeah, obviously. Wait a second. Yeah, okay, hold on. Let me just double check that I'm actually right on this. Okay, boom. Okay. plus 40. Okay, this is looking okay. Yeah, it's about right. Not exactly right. All right, I'm not doing this correctly right now. Let me do 1 second over here. Okay, I've done a few calculations now. Apologies on that. I am my brain is fried from not getting enough sleep. And what do we see? Okay, so the first cycle obviously is 2.3x longer than the prior. So that's the second versus the first. The third versus the second is about 1.43x longer. Okay, there we go. That's what I was looking for. And we should know that intuitively. Obviously, that's about 2x that or a little bit more. That one's, yeah. Okay, cool. All right, so as of right now, these last two cycles, both the, we'll call it the 2018 one over here and the 2021 one over here, are the same length. And we've always seen the cycles lengthen. The rate at which they're lengthening, however, is decreasing. So it would be relevant. And again, looking at these numbers right here, like decreased by kind of a lot, in fact. It would be relevant to say that, you know, we're probably not going to increase the cycle length by like 100%. It's probably going to be some more like, you know, if we were to just make a somewhat of relationship between these two, which would be what, 2.3 versus 1.4, going to be like, I don't know, going to be like 70% less or something like that, around there. We're just going to do that for argument's sake. Well, let's see, what would that look like on this one over here? I'm just going to plug in some numbers here to get an idea of how many days we'd kind of be looking for if that relationship does continue, which I need to bring up my calculator again. So let's say, okay, well, if that one's 1.43 longer, and that one's 2x longer. Okay, so we're probably looking like, let's just say, okay, I'm going to take 70% of that 1.43 number and we'll add that on. Okay, just basically, well, actually, in this case, that'll be too long as well. Okay, this does make sense. Okay, so it would, you know, we'd probably be looking somewhere around like, I mean, man, it's kind of hard to think about, I guess, but I guess it'd be somewhere around like 1,400 to 1,500 days. We'd kind of expect if that relationship does hold true, making like very broad observations here. So that would say that we're about two-thirds away from the end of the cycle. Again, assuming that those assumptions are true and that they are accurate. And of course, you know, the percentage gain that we've seen on this cycle thus far is certainly a lot less interesting than what we've seen in all the cycles prior, even the most recent one. Now, let's play around with numbers here again, as we can, if this relationship with the logarithmic growth curves does hold true, then we would expect a test up to the top side of this growth curve here. And well, perhaps that is going to be the returns for the cycle, of which that would suggest just under 4,200%, which I think is starting to get a little more accurate there, to be fair. You know, again, keeping in mind that the last one was about 9,000%, and the two before that were just astronomical. But obviously, we do expect it to kind of diminish over time. Technically speaking, though, we don't have that relationship just yet, but I think that would be a little more accurate. So, you know, just kind of playing around with numbers and everything. Do I think that the cycle's over? No. Would I call the cycle over if Bitcoin does come back down and break 58,500 to the downside and play at a move towards, you know, 50,000 bucks or so? Probably still no. I wouldn't really consider the cycle being over, personally speaking, as long as we're especially above that last weekly high or low right there at 44,000 bucks. So, you know, at the end of the day, could Bitcoin come down there, eat up that move, and then continue onwards and forwards, you know, for the next, I guess, that's another, no, that's not like another 500 days. That's like another little bit, like almost 2 years, actually. So I don't know. We'll see. You know, just playing around with the numbers for right now. I don't know how useful this information is going to be. I find it interesting, obviously, and kind of as a general guideline, but this all gets negated to me the second that Bitcoin goes below that last weekly high or low. So keep that in mind. Anyways, I thought that I'll just present that right there. You can see that I don't have it like fully, I don't have it like fully thought out right now. I'm kind of doing this, you know, live, because I also want to be like, you know, I also want to be essentially doing this, you know, with you so that you can see, you know, where I might be right, might be wrong. But that alongside the log growth curves, alongside the PMARP, and then the bi-monthly Bollinger Bands I do quite like. We can also take that one step further as well with these fib retracements that I had on earlier, of which you'll notice, if I can get them all properly on, you'll notice that all of these, except for this one, because that's not relevant, and I think I missed someone somewhere. Where is it? Where have you gone? There you are. There you are. Okay, beautiful. All of these represent the same cycles as well. And you can see that out of the macro base, the next cycle lows, or it's not necessarily like the next cycle lows, but the next like major pivot point in the following cycle is at the 1 spot 272 right here. So I'm taking this base right here. You can see like this major low is putting at the 1 spot 272. Okay, interesting. But what happens after that? You know, reaccumulates, trudges upwards and onwards again. Where do we bottom out? Right here, the 1 spot 272. Where do we bottom out? You know, in the next one actually at, or sorry, these are mid cycles in this case. And this one over here, same thing. You know, coming out of 2015, 2016, right? Where does Bitcoin dump down to on the 1 spot 272 right here as well? That is like your major area. You know, here, same shit. And I think we don't need that one necessarily. And then more recently, you know, where do we see that last major dump down to? Or perhaps during the mid cycle actually. Well, that was down to about $30,000, which is a 1 spot 272. Very interesting. Now, also, all of these cycles after those macro extensions have been taken have topped out at actually the 2 spot 618, funnily enough as well. Well, actually, sorry, not exactly the 2 spot 618, more like the 2 spot 272, actually. Sorry. Apologies on that. Yeah, more like 2 spot 272. Okay, so we got it right there. Boom. We got it right there. Boom. 2017. Boom. 414 and 272 all within there. And then this one over here, you can imagine, however, that the top side of the Bitcoin log curve zones will actually naturally rise up to potentially meet one of those areas, which would be between about 236,000 and 183,000. It's going to take some time, but with each and every passing week, it does naturally grow upwards and onwards. So maybe within the next few months, you know, we do see those levels around there. Perhaps that's when those become more relevant targets long term, but you know, I'll just leave it right there. I'll probably have like a clickbait title for the for this video. Understand that it's just, you know, it's just YouTube bullshit. So I think that's a good place to leave this one off. Already 31 minutes too long, and I will leave you with that. Curious to hear what you think as well. Understand that all of this stuff that we spoke about in the second half of this video, this is all experimental. I do not trade based off of this shit. I trade based off of this shit. Like this shit way more than that shit. Anyways, so with that in mind, I am going to leave you to it and wish you very well, and I'll see you hopefully very soon. Take care.